Hello, good day, everyone. Thank you for attending. This is Seewing Yi, and today's title to my video is Wall Street is coming after your house, your potential house, whether you are a prospective primary home buyer or whether you're a real estate investor trying to buy a rental home. Please listen and watch. So I'm going to share my screen. And first, I'm gonna doing something very interesting because I'm gonna play a video by Warren Buffett, the legendary Warren Buffett. And this video is only gonna be a 1 minute and 25-second video, which is taped around 12 years ago in 2012. I remember watching this video on TV. So just bear with me. Let's listen to this video. Let's listen what Mr. Warren Buffett, the world's legendary stock picker and wealth builder, they call him the Wizard of Omaha, something like that. Anyway, here we go. All right, just listen to this short video.
Buying a couple 100,000 single family homes and had a way of managing. The management is enormous. It was really a problem because they're one by one. They're not like apartment houses. So, but I would load up on them, and I would take mortgages out at very, very low rates. But if anybody is thinking about buying homes, 5 years ago they couldn't buy them fast enough because they thought they were going to go up, and now they don't buy them because they think they're going to go down, and interest rates are far lower. It's a way, in effect, to short the dollar because you can take a 30-year mortgage. And if it turns out your interest rate's too high next week, you refinance lower. And if it turns out it's too low, the other guy's stuck with it for 30 years. So it's a very attractive asset class now.
If you are a young individual investor at home and you have your choice between buying your first home or investing in stocks, where would you tell someone is the better bet?
If I thought I was going to live, if I knew where I was going to want to live the next 5 or 10 years, I would buy a home and I'd finance it with a 30-year mortgage. And it's a terrific deal. And if I was an investor that was a handy type, which I'm not, and I could buy a couple of them at distressed prices and find renters, I think that's and again take a 30-year mortgage. It's a leveraged way of owning a very cheap asset now, and no, I think that's probably as attractive an investment as you can make.
Mainly, I deal with investment sales, and that's why the
Okay, so here's my takeaway, all right? I remember this very, very clearly. So you need to understand history. And history is that even back then, even 12 years ago, Warren Buffett said, investing in single-family home is one of the world's greatest investment asset class. And I've been preaching this investment philosophy for the past 20 years. And that's what I do as a real estate investor. So at that time, Warren Buffett said, if he has a way to buy single-family home residential as a rental property, if he can scale it, he can buy hundreds and hundreds of thousands of them. He would do it. But 11 years ago, 12 years ago, the buying single-family home as an investment property is sort of in its infancy. And I've been doing it for more than 20 years. I've been helping with investors to buy single-family home residential investing for many, many years. So I could relate to what he's trying to say. He's at that time, 12 years ago, it's very, very hard to leverage for each mom and pop real estate investor to buy more than one rental property, because how are you going to manage it, right? I mean, if you buy 5 or 10 or 15 or 20, how you can have the time to manage it? Can you self-manage? Well, at the end of the day, as we fast forward in 2022, the evolution and the transformation of everyday risk investors buying many properties throughout the country, out of state, remotely, those kind of things, turnkey, and having professional property management doing it for them. You can scale this type of portfolio these days. And so if you're a newbie, you're hearing me for the first time, yeah, this could be a new concept. If you are savvy investors, been investing for the past 5 to 10 years, you know what I'm talking about. You know if you can scale it, you can do it remotely, do it effortlessly, and have a professional property management, manage your portfolio of single family homes where you own each and every home 100%, and not really need to quit your full-time job. That's an ideal way of doing it. So I have done it myself personally for many years, and hundreds of our investors have scaled their properties, buying 5, 10, 15, 20 rental properties over time, single family homes, and have property management does it for them. So, Mr. Warren Buffett, thank you for triggering this unique buying investment asset class. Now the world has changed for the better, because you have triggered my own personal motivation to embrace this investment philosophy. So, with that said, Warren Buffett at that time, he's speaking on the behalf of Wall Street. At that time, Wall Street was not involved in the real estate asset class. Now, as you know, Wall Street for hundreds and hundreds of years, they've been, they're doing very passive investments, stocks and bonds, mutual funds, right? Where you do asset class mutual funds and those kind of things. Now, a new asset class has evolved, which is buying single family home, residential real estate investing, which, mom and pop investors up until this point has been very successfully doing this, and including yours truly. And so now Wall Street are in the game. They want, just like you guys, they want to invest in single family homes in good markets, entry-level markets in the country. Ever since this video came out 11 years ago. So again, Wall Street are what you call hedge funds. Hedge funds, institutional investors, they have been entering the single family home residential investing game for the past 10 years, and they are doing very well. And why Wall Street is entering Main Street, if you will, because of the returns. Single family home investment properties has been earning a very good yield, very good return. And now Wall Street, just like a mom and pop single family home investors, they have they know how to scale with property management. So Wall Street institutions and hedge funds, they are buying 1,000 homes in a community, in a specific community, and rent it out. And they've been doing this. They're getting very, very good return. And another investment model that you may or may not have heard about is build to rent model. Build to rent. So many of the builders, they are building new construction homes, entry-level homes in the hottest markets in the country for the past 10 years. And they are selling their community of homes to investors, to institutional Wall Street investors. And then the whole community of 1,000 homes, whatever, in a specific location is all for renting. They are not, they're investors. They are buying rental homes because, look, the smart people who work in Wall Street, these Wall Street hedge funds, the institutions, the corporate buyers, they have deep pockets, right? They have billions of dollars to buy thousands of homes in a particular community throughout the U.S. And how does Wall Street analyze this kind of asset class? Used to be for real estate investors only. Well, times have changed because real estate is part of the asset class, just like no different than any other asset class, right? Commercial investing or stocks and bonds, syndications or mutual funds. That Wall Street has control for many years. Selling this kind of 401ks and IRAs, using mutual funds to regular investors, regular average Joes out there. So now Wall Street is competing against you guys. They are competing against primary home owner occupied buyers. They're competing against real estate investors like you and I, the mom and pop real estate investors that have somewhat limited amount of money. We want to buy a cash flow home in an affordable entry-level markets whereby the rent that you're charging on your rental property or covering your debt service, your mortgages, your taxes, and at the end of the month you will see positive cash flow. For mom and pop investors, they buy this kind of turnkey cash flow homes with 25% down payment, get positive cash flow, and invest over time, invest for the long term. That's how we're doing it. However, increasingly, the penetration of Wall Street, they are competing against us, the average Joes out there. They're competing against primary home buyers that want to buy a home to live. They're competing against mom and pop regular investors. Anyway, so there's a lot of fierce competition. So with that said, let me share with you some additional screens here. So here it is. Here's a recent article by, it says right here, by this is Wall Street landlords who have stockpiled 110 billion with a B, or lying in waiting for their biggest American home buying spree yet. Right now, I would say they are not a major player in the single-family home residential investment market in the country. They are probably around 5% of all the single-family homes that are sold throughout the U.S. year over year in the past few years. But this headline right in front of you that you have seen indicates to me that Wall Street, slowly but surely, they are penetrating into the housing market. They are gathering more money, and for the next 10 to 20 years, there are some people saying that eventually Wall Street will consist of like 25% in the next 10 to 15 years of the single family homes that are available for sale throughout the country in the 10 to 15 years. 25% of them will be purchased by the Wall Street landlords, the hedge funds, the corporates, the institution landlords that have deep pockets. They can buy with cash because they know, because they analyze real estate no different than the regular real estate investors you and I analyze. You buy a home, you look at the yield, you look at the rate of return, you charge the rent relative to the purchase price of the home, and you calculate the debt service, which I will show you momentarily about how the returns are derived. But let's continue to look at the big picture, see how motivated Wall Street is to enter this increasingly a very diverse, very lucrative asset class, single family home residential investing. All right, so this is just this is a tip of the iceberg. Okay, so here it is. Here are some of the main players, the Wall Street, the hedge funds, some of the names. Invitation Homes, they've been buying single family home using the hedge funds for several years now. So if you can look, it's kind of hard to see below. They are targeting the Sun Belt markets. Sun Belt, like you know what I mean by Sun Belt, in the Western region and in the South and Southeast mainly. Okay, they are targeting. They're working closely together with builders and developers in those hot entry-level boom towns all over the country. Sun Belt, and I'll tell you where. Invitation Home is one of the players. You have BlackRock. You have American Homes, right? American Homes is another major player that's they are investing in Florida among many areas. American Homes. Then you have Goldman Sachs, or you have J.P. Morgan, you have Blackstone. All these Wall Street hedge funds are penetrating the single family home market, and so basically they are competing against you guys. So the competition is going to be very fierce. So for those of you guys out there, hey, you gotta be aware of what's going on. And so where are these hedge funds, Wall Street, where are they buying single family homes? See, uh, there's a 60-minute segment was done recently. They interviewed one of the hedge fund managers, and they are what are their geographic blueprint. One of the hedge funds said, we only manage over 37,000 single-family homes and multi-family rental properties in the U.S. and Canada. Look at some of the areas they're going to. They're going into the Sun-Belt, warm weather areas, fast-growing job, entry-level homes. You know, the new builders are having a lot of trouble building entry-level homes. What do I mean by that? Entry-level homes are anything that are less than, you know, around $350,000. Single-family home, 3-bedroom, 2-bath, around 1,300 to 1,700 square foot. That's a typical single-family homes, cookie-cutter homes that these Wall Street hedge funds are coming after. So they are competing against you guys. Just be aware of it. Be cognizant that you're going to have a lot of competition moving forward in 2023 and beyond. As I speak to you, the first quarter of 2023 right now. Look at some of the spots, not necessarily California. California is expensive. They've been buying, you know, tons of homes in Las Vegas, Phoenix, Arizona, Boise, Idaho, and then Denver, Colorado, and Austin, Texas, and Central Texas, you know, all over Texas, really, Dallas, Houston, San Antonio, and Austin. So these hedge funds are entering this market: Tennessee, Nashville, North Carolina, like Raleigh and Charlotte, South Carolina, also a lot of Georgia, and also Texas. Right, all over Texas, these hedge funds. You know, Florida is the fastest growing location, you know, fastest job market, fastest population growth, the whole 9 yards. So that's entry-level homes they're coming after. So risk investors, okay, primary homeowners, depending on where you live, you know, some areas of the country is very, very expensive, like California, you know, medium price, whatever, $1 million, that's too expensive. But if you're a primary home buyer, whether you are a first-time home buyer, using a 0% down VA loan, or FHA buyer, 3.5% type of first-time home buyer loan, if you're conventional buyer, regular buyer, first-time home buyer buying first-time homes or the conventional lending, 10 to 20% down, whatever. So first-time buyers, you're looking for the entry-level homes, which is very hard to find because it's not profitable for the builders to build a lower cost entry-level homes. And because they are so affordable, even with the interest rate it is right now, it creates a lot of competition. Plus, the builders are not building entry-level homes; they're building homes that are like, you know, $400,000 to $1 million, because that's where the profit margin. If any kind of builder that built for less than $400,000 single-family home, the profit is just not there. So it's very, very hard for a first-time home buyer to buy a affordable single-family homes, even in the markets I just mentioned to you. So it's very difficult for real estate investors. I've been preaching this philosophy for many years. You need to buy homes that you can cash flow. You cannot cash flow buying a single-family home in California or in any of the high-priced markets in the western region, or in the northeast, or somewhere. It's too expensive. You cannot cash flow. So the sweet spot for risk investors to buy a single-family home brand new, you're competing against the Wall Street anyway. I mean, risk investors, mom and pop, you're competing against not only Wall Street increasingly, but you're competing against first-time home buyers to want to buy one of these homes to live. So with that said, briefly, this first-year performance is strictly for real estate investors that want to buy a rental property in a good area, new construction, in a hot market in the Sun Belt, Florida, Texas, Georgia, Arizona, Las Vegas. These are the main, and North Carolina also, as I mentioned. So, and I'm using a real example of the property that my network is promoting for our investors as a sample. This is a nice prime home you should go after. Look at the numbers. I'll be very brief. This video is not only for real estate investors, but I want to prove a point. I want to share an example. The whole bunch of people want this type of entry-level homes for investment purposes. You, as a real estate investor, the Wall Street, there's a big-time investors, and then primary home buyers, especially first-time home buyers. So $325,000. This property happened to be in Florida, Cape Coral to be specific. $325K. You put investor, you put 25% down payment. Total out of pocket around 80 grand plus closing costs. Then you get a rent, monthly rent of gross rent of $2,600. You minus the monthly cost, taxes, insurance, and you can get a 6% rate as an investor, because at least for right now, the builders are giving you a lot of incentive. They're helping you to lower your interest rate if you pay 2.5% on points. If you pay points, you can lower your interest rate, or the builders can give you some incentive where they'll give you some closing costs, or they can help you buy down the rate. So you can get essentially, based on today, January 16th, I'm not sure what's today's date. January 16th. The fixed rate mortgage right now is around 6 point whatever, the low 6, and you can get, as an investor, you can get a lot of incentive. Lowering your mortgage rate is a good incentive. You get a 6%, 30-year fixed rate mortgage as an investor, getting an investment loan. You can do that right now, believe it or not. Normally your interest rate is higher, but again, right now is a good time to work with a builder, because they need to they need to absorb this excess new construction homes that are lingering out there due to the lowering of the demand. So the numbers are, I'm not going to go over too much anymore on this pro forma cash flow projection, if you will. Needless to say, even at a 6% interest rate, the monthly mortgage you have to pay $1,461. By the way, the monthly mortgage, you're not paying yet this monthly mortgage. Who's paying your mortgage for you on this to get this house? Who is paying your monthly property tax, your monthly insurance, and who is paying the maintenance cost you have to pay over time, and the vacancy cost? You have to pay as a landlord? No, you are going to outsource all the debt service, all the payment to someone who is called the tenant. Okay? Wow, what a great concept. So as a landlord, the renter gonna help you become rich. They are paying all your debt service. All you have to do is come up with a down payment, and then the rest is history. So you buy and hold for the long term. You increase your rent systematically over the years. The renter gonna pay down your 30-year mortgage. You get tax benefits. You get you get equity appreciation. You get you get the ability to leverage your debt. So multiple ways to make money as an investor. So anyway, so well, I'm not done yet. Okay, and finally, wow, this recap. Back to Warren Buffett again. Here's Warren Buffett. So be fearful when others are greedy, and be greedy when others are fearful. So I began with Warren Buffett at the beginning of this video, and I'm ending this video with Mr. Warren Buffett that give you some last-minute motivational thing message. So to recap, single-family home is the world's greatest wealth-building investment vehicle. It's the greatest asset class because of the 5 ways I just shared with you how to make money as a risk investor. And Warren Buffett years ago mentioned if he had the ability to scale to buy multiple single-family homes and own that 100% your name, or in the name of the IRA for that matter, if you can scale it, have the property managers manage 10, 15, 20, 30 properties. If you have the financial resources to do it over time, long term, you can do it, and you can do it. You can You can buy in the whole and scale this portfolio even though you still have a full-time job. That's right. Okay. All right. So with that said, thank you for listening. If you receive a lot of great value on this video, please smash the like button and also subscribe to my YouTube channel. And of course, if you have not already done so, please log in your email into my website below, so you can become a real estate investor, part of our real estate investor free membership, part of our network in our real estate investing community to learn more about real estate investing for free, getting free newsletters every week. So ultimately, you can become a savvy real estate investor regardless of your background, regardless of your experience level. All right. So thank you so much for listening, and I will see you on the next video. This is Seewing. You have a nice day. Bye.